Hi everyone and welcome back to another video on my channel. It's been a while since my last video and here I'm back with a new video where we're gonna discuss an interesting topic. So thank you guys for the support you've been giving us lately. It's really heartwarming and really appreciate it. Today we're going to talk about the order flow mistakes that you are probably making. So in our daily life trading the order flow, we of course make mistakes and we just need to find a way to stop doing them. Mistakes are something that eventually everyone does. I myself do mistakes. If you watch my live stream, sometimes I just admit that I made a mistake here or I did something wrong. I should have done this, I should have done that. But that's trading, and you just keep evolving and growing as a person while trading every day. One day you just find out that you're still making mistakes that you made as a beginner, and you know that you should make them, but you still make them. And that's a very important and interesting topic to talk about. Okay, so I'll try to make a video this week about psychology because I'm well informed in psychology. Especially I've read many books from Mark Douglas books and many other trading psychology books that helped me a lot in my trading career. So most traders treat order flow like a cheat code indicator, but ignore the auction logic behind it. In this video, we're breaking down, it was 5, but I reduced it to 4 only, the 4 most important common mistakes that turn a powerful tool into a source of noise. So we all just think of order flow as a cheat code, right? We just think of numbers, and if this happens, then Y should happen. If X is here, then Y should be here. If it does this, Y. If it does this, sell. Well, it can be sometimes, but it's not every day. Sometimes you gotta read the whole auction together to understand the market rather than look for setups that you've been finding throughout your trading, okay? So entering a trade just because you see stacked imbalance without looking at where it is occurring on the chart. Order flow is for execution, it's not direction. If you aren't at a key daily level or a high volume node, as explained on the volume profile, that imbalance is likely just noise from a small scalp or a computer algorithm. Focus on understanding market context, or if you are going to take a trade, make sure it's market context driven. Here, for example, as we see, okay, we see stacked imbalance here, the market still went up, but here, many people think, oh, we broke past this level, that means I should buy. What happened next? Trap trader setup just showed up here, okay? So when you're trading, when you see a potential trade, try to analyze the whole thing and make sure you get market confirmation first. Like if you see a setup happening, at least look for the market showing you that this setup exists. If it doesn't, then there is no need to trade, okay? So second one is seeing a massive buying balance at a new high and thinking the bulls are aggressive. I need to buy. I mean, I'm gonna use the same thing, same setup, because here it's a different thing. Here we're talking about stacked imbalances, but here we're talking about market. Just you see stacked imbalance without looking at where it was occurring on the chart. Oh no, this is the first one, this is the second one. Seeing a massive buying balance at a new high and thinking the bulls are aggressive. I need to buy. This is often just exhaustion. When the aggressive buyers meet passive sellers, the aggressive buyers get filled, but price stops moving. This is the top of the move, or in the picture we have above. Those are just trap traders, okay? So many people would went long as soon as possible, but little do they know, those are trap traders here, and they themselves got trapped. Then the market went down. Okay, didn't go pretty down, but I guess all of your stop losses being hit. There is no one that has the power to put a stop loss here. That's the S&P 500. That's not gold or something, okay? Especially with a high lot, that's not high contract is not possible. So the next thing I want to talk about is trading during the low volatility hours just because the footprint shows a signal. And you would understand if you watched our live stream, I guess last week or the week before. Yeah, that was the week before. So I had a day with low volume, but I still wanted to trade. And then I just kept getting stopped the whole time. When the market is trading randomly, when there's no volatility in the market doesn't do what it is supposed to do. It's like someone, it's like, just think of it like the market is having these periods, okay? You can never understand the girl's emotions when she's on period. That is the same thing that happens to the order flow, right? So everyone just gets lost, the trades doesn't make sense, and everything that happens doesn't make sense at all. And then you just get stopped and be like, oh, but this guy told me order flow is the best way to trade. Yes, somehow, but not if you trade in low volume hours. You just want to get stopped, and that is why you're trading. I mean, if you're trading, at least trade at times of peak volume. Trade at market entry, 9:30 Chicago time. That is the time when you have lots of people trading, and that is the time when you should be trading, okay? So the fourth thing is seeing price go up while delta is negative and immediately shorting the market. Negative delta with rising price is actually a sign of absorption. It means buyers are strong, that they are absorbing every single market sell order with limit orders and still moving the price higher. And that is a bullish sign, but not a reversal sign. All in correlation with market contacts, signals, and confirmation, of course. So this could be it, but couldn't be it at the same time. Sometimes it could be just um, it's not always like this, but sometimes it could be something else. Just also always depending on market context. I mean, look at it twice. So here we had a green bar, green candlestick with minus 72 in delta. Same thing here once again, red bar with 173 positive delta. That tells you a lot about the market. So you just want to understand it. Just know that people here are too strong, that they're moving the market, and always don't follow the delta, but rather follow the candle. If the candle is green and delta is red, just know that the buyers are strong. If the candle is red but the delta is green, that means those sellers are strong. So think about it like this: price above delta. See what the market does, then delta does, okay? You should understand and focus on looking at what the market is doing instead of what delta is doing. So it's always a stronger signal if you focus on the market and on the price action, on whether the candle is green or red. But it's not always like this. Sometimes it's just happening normally, and then the market does what it's supposed to do. I mean, as I said, all in correlation with market context, signals, and confirmation. Look for signals, look for confirmation, and try to understand the market in general. So we've come here to the conclusion. You should stop looking for signals and start looking for stories. Who is trapped, who is being absorbed. We can keep going on who's control, who is weaker, who's getting stronger, who's becoming less strong. I mean, the list goes on with more and more questions, because you should try to understand the market rather than looking for setups and signals, and this will improve your trading by far. So look for shifts in supply and demand, and have a general idea about who is strong and who is weak. Don't just follow blindly. Try to understand the whole thing. It's like an auction. It's like a lot of people sit in a room where buyers and sellers are fighting. People want to buy, people want to sell. And you should be looking at the exact position where buyers are getting stronger. So you buy when they buy, when the price then will boom up. And you should look again for sellers when they get stronger, when the price is high, for it to go down. So you buy, sell at the top, and you buy at the bottom. So this is the whole market. There's no, if X happens, then do Y. If X doesn't happen, then don't do Y. No, it doesn't work like this in the order flow at all. You should understand the market context from delta, confirmations, everything we read throughout the whole time in my channel. You should just try to apply that, and trust me, your trading will improve by far. So you move on to the conclusion. So guys, thank you so much for watching this video. It was great to have you all, and I hope to see you in the next video where I'll be talking about psychology as I promise you. And please do let me know if you have any questions. So this was Ether from Order Flow with Ether. Make sure to leave a follow, subscribe, like, and hit a comment. So thank you and goodbye.